Hello members and fans. Welcome to my channel and thank you for subscribing and watching my videos. In my earlier post, Risk and Insurance, I promised that I will be looking at personal insurance policies one by one so that we all together help educate each other and understand these policies. It is that time now. And the first policy I will be reviewing is motor vehicle insurance, which we will discuss conclusively in 4 episodes. 1. Different types of motor insurance policies and what they cover. 2. What to consider when buying motor insurance. 3. Claims handling procedures. 4. FAQs. Part A. Different types of motor insurance policies. Motor insurance is the largest class of insurance by numbers, and this is contributed by many factors, among them laws making minimum motor insurance coverage mandatory in most countries, and the fact that motor is considered among prestigious investments. There are different types of motor insurance such as motor private for private and personal use. Motor commercial, own goods for use of to carry insured's goods only. Motor commercial, general cartage for usage in the business of transporting goods for hire and reward. Motor commercial, taxi for taxi business. Motor commercial, PSV for PSV business. Yellow card insurance, which extends coverage outside the Kenyan jurisdiction. Motorcycle insurance policy. What determines the type of insurance one purchases? The type of insurance cover to be purchased is determined by 2 things: tax classification and use of the vehicle. The first determinant is vehicle tax classification. Tax classification is determined by the government, and it is always indicated in the motor vehicle logbook as either private or commercial. The government, through its agencies, can reclassify any type of motor vehicle to any class. Once this is done, insurance policies will have to be reissued to comply with the reclassification. About 5 years ago, the Kenya government reclassified double-cabin pickups from commercial to private use. The second determinant of what cover you should buy is the use of the vehicle. Each of these motor policies have different risk exposures and are rated differently based on the owner's declaration of use. Therefore, an insurance policy declared to cover one use, like for carrying own goods, cannot cover use for the other use, say carrying goods for hire and reward, also known as general cartage. In the same way, you are not allowed by your insurance policy to use your private car with private insurance to conduct taxi business or Uber. If you declare one use, then use the vehicle for a different purpose other than the declared one, the policy will not respond when a claim arises. Scope of motor insurance policies. The scope of an insurance cover simply refers to what risks are covered in a certain policy. There are 3 most common scopes of motor insurance covers, namely: the first cover scope is third-party insurance cover, TPO. This cover only compensates other road users and other third parties in case of an accident. This cover is the cheapest, but it does not afford any benefits to the owner of the motor vehicle. The second scope is third-party fire and theft, which compensates what is covered under the TPO cover explained above, as well as pay the vehicle in cases where it is stolen or burnt. It does not cover vehicle damages resulting from accidents. This cover is not common. The third and most common one is comprehensive cover, compensates third parties under TPO cover, fire, and theft, as well as extends to cover the damage to the car following an accident. Now that we have discussed what motor insurance is and gone through different types as well as the various scopes of coverage, Let's talk about what you need to know while considering purchasing an insurance policy in part 2, in our next video. Let me know what I have left out or ask any questions in the comments below and we will discuss them under FAQs. Meanwhile, subscribe, watch, comment, share, like and comment.